Hi, this is Pat Moorhead with Moor Insights Strategy, and we are here for another 6-5 podcast. This is Pat Moorhead. I already said that. I must be on vacation in an undisclosed location in Colorado, but I am here with my bestie, Daniel Newman of Futurum Research. How are you, my friend?
Not on vacation, but it makes me really happy to pull you off of your time away and make sure I suck you back into the work vortex. But that's only because as your bestie, I know you actually get a lot of joy out of work. So those tweets about, oh, woe is me, I'm working on vacation. I actually believe it's sanity for you to put in a couple hours every day because you love what you do, just like getting on this pod. It's the best part of your week. Hopefully no one in your family's listening, but that's just what's up.
No, but they all left this morning and they're watching a balloon show. So hot air balloon show as dad. And
yeah, you'd much rather look at hot air balloons than do the pod with me, right?
To be honest with you, getting up at 6 a.m. and seeing some hot air balloons, I'd rather be here. But no, in all seriousness, this is my favorite time of the week. And if this is your first time here, we cover 6 topics for 5 minutes each, maybe 10 if we feel like, because it's our show, so we can do whatever we want. But in reality, we do what our fans want, which sometimes is talking between 5 and 10. Where we do talk about publicly traded companies, like we're going to talk about Oracle today and their earnings. Please don't take any of this as investment advice. But no, we do have a great show. I mean, there was a lot of stuff happening, Daniel. We had to figure out, what do we put in? What do we prioritize? What do we kick to next week? But we're going to be talking Oracle earnings, IBM LinuxOne announcement, Adobe earnings and acquisition, maybe trying to go after Figma. We're going to talk about a big Cadence announcement, auto AI, basically. We're going to talk about the latest round of Tesla self-driving issues. And then finally, ARM had a big disclosure on its infrastructure. We're going to dive in. But let's kick off here with Oracle earnings. Could Oracle do it again in the cloud, Daniel?
Well, let's just say Oracle had a pretty good quarter. It was a mixed result on top and bottom, but overall, given the global macro situation, Oracle continues to impress. I'll spend less than 1 minute because this isn't really news. This is analysis, but just a quick minute on, hey, the company did well. It did great on revenue. It did good on the bottom line. It did add accretively a component of the Cerner acquisition, which made the growth look a little bigger than it really was. But when you pulled that out, it was still nearly 10% organic with constant currency, which given the macro climate right now, I thought was really good. But I went on Yahoo Finance. I did a little TV spotty. And my comment was basically, of course, you were away. You were away. So they had to bring in the B team. And so my comment was really simple, Pat. It was, this is a cloud story. This quarter for Oracle is a cloud story. The Cerner acquisition is a cloud story. It's the healthcare cloud. And we've all talked a lot about the importance of industry and vertical clouds. But it's really a good for you, Oracle, for starting to provide a level of transparency on your cloud business that sort of backs Larry Ellison's longtime comments about this company making this big transformation. You don't know the background. Oracle, about 70% of its revenue is totally recurring in the sense that it's all tied to its core and legacy business, which has always made it a very stable and solid business to invest in during periods like this, with a high percentage of that revenue accounted for. And then, of course, consistent margins, dividend, buybacks. The company does all the things that make investors feel more secure in these really volatile times. But is there a growth story here? And I think that's really what has made a lot of us as analysts excited. Now, they asked me the question straight away, like, what's up with the Oracle Cloud? And I think you and I have said this 20 times, so I'm just going to say it really quickly. The evolution from the original Oracle Cloud to now has been impressive. It's been very good. And that's why the company is seeing more wins. And then the company obviously has split its cloud story into really 2 buckets. It's an infrastructure story and a SaaS story. And now they're basically able to disclose very valuable data on where they're at. So the cloud revenue is going up substantially, 45% this quarter, $3.6 billion. So as I said, I think 1 or 2 quarters ago, it's more than a $10 billion a year business. That's pretty good. They also gave some data on the breakdown. So the infrastructure business, everybody always wants to know how much infrastructure is being sold. Well, it looks like Oracle's trajectory on the cloud infrastructure, its IaaS business, is about $4 billion a year right now. They had 0.9 this quarter, and it was a 52% increase year over year, 58% constant currency. And then, of course, for a longer period of time, we've been tracking the application revenue, the SaaS revenue, and that fills the rest of the gap. 2.7 billion, 43% up, 48% in constant currency, with strong back numbers from Fusion at over 30% and NetSuite in the high 20% of growth. So Oracle is a cloud story now. This quarter was robust. Guidance was solid. The economy sucks. And so right now, it really doesn't matter. And if you're good, if you're bad, everything that was good a year ago is bad now. But what I would say is if you're looking for a company that has a combination of stable revenue, good margins, is going to be robust and necessary in any economy, Oracle is telling that story, and they're kind of giving a little bit of a cherry on top by adding a higher growth cloud story that investors and technology enthusiasts should be excited about. Let's just put it this way. This ain't your mama's Oracle anymore.
You pretty much sucked all the oxygen.
Come on, it was like 2 minutes. I only talked for like 2 minutes.
No, you hit exactly what I want to hit on. But I guess what I would say is hell does freeze over as well. He's cutting deals with AWS to put HeatWave in the AWS cloud. And HeatWave, if you're not familiar with it, is a NoSQL database that can either be on-prem, can be in the Oracle cloud, can be in AWS. And it puts a lot of the data in real memory and gets a hell of a lot of performance out of it. And, here we have, if you remember, there are 2 companies that AWS makes fun of and picks on in all of their reInvent conferences. The biggest one is Oracle, and the second one is IBM. And if you saw OCI, which is their IaaS platform, OCI 1.0, it really was not good. It led in nothing. It was expensive. Larry brought in some folks from, quite frankly, he hired them from AWS and came in and built OCI 2.0, which is completely serverless. And he moved his applications, completely rewrote his on-prem applications that then turned into Fusion. So that 52% growth in IaaS is pretty much the highest growth rate in the top 5 clouds. And I know people will say, it's not that big, but it's at least $5 billion of IaaS, which is super impressive if you see that OCI 2.0 really only started 2.5, 3 years ago. They've literally only been in business for 2.5 or 3 years with something that was even slightly competitive. So, hats off to Oracle. I don't fully understand why their stock skid more than most. Maybe investors were looking for a bigger bump from Cerner. Maybe not. Maybe you're
it's the
selling
economy, dude. It sucks. The economy sucks.
They dropped lower than others. So
But you remember the CPI came out like the next day. So we got the inflation data the next day. And, while you were on vacation, I'm not saying that cynically. I'm saying that took the whole market down. It's such a huge magnitude. You want to talk about getting crushed? Wait till we talk about Adobe. So I'm just saying, I think, Pat, I think it's CPI. I think the inflation is way more persistent, and we don't have any strategy but a blunt force freaking sledgehammer to crush demand, and it's going to take tech with it. And I'm not happy about it, in case you couldn't tell.
No, I appreciate that, and you're right. Even though I've been working 4 or 5 hours a day, it's not 12.
Dude.
Bro, we all take do what we do, so it's all good. Hey, let's move to the next topic.
Right on, bro.
which is IBM announced its latest Linux-based mainframe called the Emperor 4. And you might say, well, why talk about mainframes? Well, mainframes are more popular today than they were 10 years ago. And there are a lot of reasons for that. So I'm just kind of giving the backstory here. But LinuxOne obviously runs Linux. We're in the 4th generation of this. And it essentially uses the guts of the latest Z16, but uses a very different software ecosystem. It can run containers from Red Hat. It can run serverless applications. It can run your favorite Linux applications. It truly is incredible. And the other big change that the mainframe platform has taken is that's integrated AI on the chip, has the highest levels of security. Quite frankly, it's the only hardware platform that supports the highest level of FIPS security. But 2 things stood out for me, and that was, even though the company wanted to go all in on sustainability, which I do think, the boards of directors are figuring out how do we hit our goals. But what was really crazy is the consolidation story. And I looked at the data, and it looked legit to me of what you might find in a current ecosystem. But essentially, you can consolidate 55 Intel servers into one LinuxOne box, sucking 62% less energy and taking up 86% less data center floor space. That freaking blows my mind. So I think when clients are looking at, hey, do I bring in Sapphire Rapids or do I take a chance on this new LinuxOne box? And I only say take a chance as it relates to non-clients or non-customers. And I wish IBM would put a little bit more effort into going into new business as opposed to, upselling their current clients. That to me is a lot more interesting. And I don't mean that this isn't interesting, but I think that they would turn a lot more heads if they would, hire a completely new sales force to go after new logos and a big one. So I was really impressed. You can go on their website and plug in kind of what your infrastructure looks like, and it spits out a TCO calculator. It also helps you potentially go to the board or go to the executive staff if you're trying to hit your company's sustainability goals and say, hey, let's do this. And Daniel, I've really thought about this. Companies like Salesforce and Mark Benioff are always talking about how green they want to be. They're the leaders in green, and this is what they're doing. Shouldn't companies take a chance if they're currently using x86 servers today, either on-prem or in the cloud, take a chance on this LinuxOne box that, by the way, fits in a standard rack, fits in standard power. You don't need water cooling. You can use air cooling, just like all of your x86 stuff. If you're running Linux apps, you can run them on this platform. Freaking consolidate 55 Intel servers. That's pretty cool.
Yeah, I mean, I could think of a company that may not be a huge fan of that idea, but we do have to be somewhat, we have, as analysts, we have to set shape to the market. And in this case, there's a pretty significant argument to be made. Sustainability is at the top of every company's mind. You go to an event right now, you will not hear a keynote where a company does not lean into how they're helping Mother Earth, the carbon net zero. And the bottom line is really the bottom line. As we get into an era of measurements, we're going to have to measure what companies are doing and what companies could be doing. So, Futurum analyst Stephen Dickens drove into this one. So I kind of went through his analysis. He provided some of the feedback during the development. Pat, you really hit the sustainability thing hard. I think that's an area to lean in. I think you hit the scalability thing hard. The fact that, again, you can consolidate a lot of investment. And I like what you said about the sales side. I do think IBM has sort of been like, this is our little universe of customers, and we're going to keep selling them the next box every time the next box comes out, and it creates the super cycle. But what if you had a bigger biz development cycle that could drive more new adoption in between? And I guess that is the question of, are new customers open to the idea of this type of technology versus what would be considered more traditional or nouveau cloud architectures? Now, IBM, in its whole strategy about building this true hybrid cloud that's a little bit more full stack, means that IBM's building LinuxOne to be compatible to not just the IBM cloud, but to other hyperscale cloud. And that company's been very actively working to build partnerships that can create a fabric that enables companies that use a Google or an Amazon or a Microsoft to be able to work strategically with their traditional mainframe hardware. The only thing I'd add, Pat, is I thought there was a pretty impressive, you kind of touched on the on-chip integrated accelerator. That seems to be a big focus following the Telum announcement that came out in the last generation of the Z box. So they're continuing to add AI and inference features on chip in the LinuxOne, so that doesn't have to be done outside of the core infrastructure. And then the security, Pat. I mean, that's the only thing I think we didn't touch on too much here. Companies really showed some key focus on security, quantum safe capabilities, key generation encryption, key encapsulation mechanisms, hybrid key exchange schemes. And this is all the stuff Stephen pointed out, but a number of cryptographic enhancements, a lot of focus on security, which anyone that listens to this that knows about mainframes knows security has been probably the number one reason that workloads have not moved off of mainframes yet, is that they're beyond being reliable and scalable and available, they're secure. And so IBM continues to lean into that. Good on them, good on Ross and the team. Congratulations on the launch.
Yeah, just to add to the security piece, like it's the only box out there that is not only quantum safe, supports confidential computing. And by the way, quantum safe, I don't use lightly, right? Not like cloudification or something like that. Essentially, what's built in is in the future, you can upgrade your security to be literally safe from quantum-based attacks. And that could be 5 years in the future. That can be 10. That could be 10 years in the future. And the company brought out a really interesting stat, which says you can execute up to 20 billion secure transactions per day based on a microservice-based application running on Red Hat OpenShift. I mean, it just blows my mind. But anyways, great ads there. And, Steve might know a little bit about this stuff, given that he used to be in charge of mainframe sales at IBM, or at least an executive in there.
I think you led the offering on the LinuxOne and the Z box, but let's just say that there's no one more passionate about it that I've ever met, maybe but Ross.
Yeah.
So it was definitely a very in-depth. I'll put it in the show notes, Pat, but you wrote a great piece on it too. You put a research report out, and that'll be in the notes as well.
Hey, I appreciate you helping me plug my own research reports.
I always plug you, dude. I always plug you.
Yeah, I'll have a Forbes article coming out sometimes after I get back from vacation.
Read his Forbes article. It'll be awesome.
Yeah, I appreciate that. So, hey, let's move to the next topic here. This is going to be a fun one. We really have two topics in one, and that is that Adobe is looking at buying Figma for $20 billion. And then Adobe also pre-announced by a couple hours their earnings. Daniel, why don't you take this one?
Yeah, so I'm going to hit the earnings in about 15 seconds, and then let's talk about Figma. The earnings were really good, and no one cared because the Figma deal came out at the same time. And when you make a deal with some of the stats, and I'll talk about them in a minute, and I'm gonna play the bull here because I think you're going to help me play the bear a little bit, and we can come around. But the earnings were good. The company beat top and bottom. Their guidance, given the kind of overall guidance adjustments we've seen this quarter from a lot of companies, their guide was still pretty good. Still going to beat on the bottom line, maybe a slight pullback on the overall revenue expectation. Called out the headwinds. but still a ton of demand. I mean, this company is a company that enables digital, so it doesn't have a big physical presence requirement for it to gain more demand. In fact, but as things like e-commerce slow, that could affect it. But at the same time, as holidays roll in, that's a tailwind for a company like Adobe. So the fact that it came down 10% to pre-pandemic lows, I want to point that out. Almost as if the company has not grown, and it has. The record revenue this quarter for Adobe. Now, let's just talk about Figma, though. For those not familiar, I'm going to really overly simplify this, but if you're familiar with like visualization software like Dassault or 3D Excite that's used for creating products in a collaborative space, this is the collaborative whiteboard for creating a digital experience. So when you're designing your Netflix, this is go in and have an area that everyone can work and co-design at the same time and move things around and create a visual experience and a commerce or a customer journey in a shared environment. That's what Figma did. Figma's I'm going to kind of do some economics history here. Figma is a 10-year-old company, okay, or a little over 10, 2011 start. But it did not have its first dollar in revenue until 2017. So when you're tracking SaaS companies, the typical approach of doing that is how fast do you grow from your first dollar in revenue? Okay. So in 2017, first dollar, in 2021, 200 million. And in 2022, it's projecting to hit 400 million in revenue. As a little bit of a backdrop on what that means, the average SaaS, cloud scale SaaS company takes 4.5 years, I believe it is, to reach $10 million from their first dollar of revenue. Yeah. Okay. Only 8 companies of the 72 cloud scale SaaS companies that are currently that were measured in at least one study that I looked at got to 100 million in less than 5 years from revenue. Those are Slack, Square, Dropbox, Elastic, Hortonworks, and Pivotal. So it's actually 6. Sorry, not 8. Sorry, 6. I can count, but not this time. And Friday, on average, most companies take 10 years to 15 years to hit $100 million. And let's just be clear here. This company hit $400 million in 5 years. Why am I sharing this? Well, cloud economics are interesting. And a lot of times, even as these companies were hitting $100 million, they didn't make any money. This company is net operating profitable. So they're making money. They kept 90% margins, 150% net customer retention. One of the fastest, if not the fastest company to hit 200 million, if not 400 million. They're going after a $16.5 billion TAM, and they have almost zero cost of customer acquisition. And the reason I point all this out is rare companies are still rare. And so when you're an Adobe and you're looking at a market you want to go after, you have to consider, well, what would it cost us to build this? Well, XD was their product and it hadn't succeeded. They were de-investing in it. That's the only competitive product they have, and they don't use it. They're not selling it or promoting it. So this is an augmentation of their current revenue. It's not going to be a competitor. The question is, there's some antitrust stuff. I'll let you do that part. But in the end of the exercise, a company that's creating that kind of margin, this kind of growth, does it warrant a 50-time forward earnings? And a year ago, I think everyone would have just applauded and been like, this is great. But in this economy, it's really hard to get away with it. So I'll leave it at this. In this particular time, in this market, it's very hard to say that was a good decision for Adobe. It's very hard to say it. However, in 5 years, if the company continues to grow at this rate, they will look back and we will realize that, once again, the crazy hive mind market pundits will have gotten this wrong, and Santanu and the leadership at Adobe got this right. And I think that's what we'll end up finding. But again, in this current market, there's no way this would be accepted or people are going to like it, hence the sell-off. But I don't necessarily think Adobe was wrong.
So I'm not going to hit on, I'm not going to hit on the earnings. I'm just going to hit on the deal here. It was interesting. I was thinking through this, and this absolute ridiculous 50x in this time frame. And Daniel, you kind of got me into Succession, and I was wondering, hey, which Waystar Royco deal is this more like? Is this like the Vulter deal, or is this the Gojo deal? And if you remember the way that Vultr ended up, they essentially just went in and shut down the company because they lied about all the. So it's probably not going to end up like that, but maybe more like Gojo, where literally they came in and did that. But then again, when I look at Vultr, it was this young company. People weren't using the old media, which is exactly what we're looking at here with Figma, because I couldn't help but to look at the comments about it, and you had these really passionate Figma users that were almost like, I use Figma, but I hate Adobe, right? Kind of like Vultr
Slack and Salesforce or
Roku or Instagram and Facebook. So that's kind of what it brought up with me. But if I get real here, like a real analyst, like I should be, top two concerns. Number one is antitrust, right? The current environment in the Department of Justice and the FTC with the crew that the Biden administration brought in. Not only do they dislike huge companies buying smaller competitors, the agencies are actually actively investigating companies like Facebook for buying Instagram, over 5 years ago? So
it's like 15, I think.
That's not accurate, but I'll go along with it.
How long ago okay, go ahead.
It definitely happened after I started my company, but heck, Facebook didn't even go IPO 15 years ago. It went more like, I think, 11 years ago.
I'm just screwing around. It was a long time. Go ahead.
No, so coming into this environment, how on earth are they going to pull this off? And I kind of riffed on one of the first articles that came out from TechCrunch. Literally, the headline was, Adobe is buying Figma for $20 billion, taking out one of its biggest rivals in digital design. So, issue number one. And issue number two, I think you talked about it, which was 50x forward ARR, $20 billion, one of the highest SaaS valuations I've seen, at least since the market's been down. And is this the best use of Adobe's capital? I don't know. We'll see.
Well, so 2012, so we were right in the middle. You were 5, I was 15. It was actually 10. So there we go. That's the exact number there. What do you say? It's the over-under. And Pat, I totally agree with you. By the way, highest valuation, I think the second highest ever SaaS deal, highest ever private deal, and definitely a multiple that's got. I can't wait to hear what David Sachs has to say about this one. That's going to be a good one on the other bestie pod. The second bestie pod.
No, I know, and I'm interested to hear what Logan Roy might say about the deal. But it starts with an F and it ends with an O. So
an off. It starts with an F.
Exactly. He's going to build it himself. So F off. Hey, let's move to just a completely different plane of existence here. And this is getting into the software tools that you build IP with and that you build and design SoCs with. And Cadence came out with a super exciting two announcements. First one is called Verisium. And this is an AI verification app suite that sits on top of what's called JedAI, which is the Joint Enterprise Data and AI platform. So essentially bringing AI to verification. You might be like, Pat, this is so nerdy. I don't get it. I don't understand it. Well, here's the deal. So in the last 5 years, the cost of an SoC going from 10 nanometer to 5 nanometer has tripled. Okay. And inside of that, you have 5 costs, right? You have IP qualification, right? That's like a CPU, qualifying the CPU you might get from ARM. It might be x86. There's money that goes into the architecture itself. There's the physical IP. There's the verification to make sure the physical IPs work and the architecture work. And then you have software. And we all know that software has gone up exponentially when you're looking at SoC. So this tool essentially can reduce debug verification times up to 10x by leveraging all of the knowledge inside of the enterprise into any type of design that you've ever done. So if you did a prior design, it learns from this. And so it pulls data from 5 different platforms. And by the way, most of the audience has never heard of this, but Jasper, Excellium, Palladium, Protium, Helium, okay, pulls it into JedAI so it can learn from the future. And then Verisium is 5 different tools for debug, semantic differential, pin down, wave monitor, auto triage, which again, I don't expect you to know, but I think it gives credence and depth over just saying it's AI, right? 2 big quotes that I thought were big coming from 2 of the top 5 largest semiconductors out there. Samsung Semiconductor, who's either number 1 or number 2, depending on the day, and MediaTek, the number 4 silicon vendor out there in the world. So congratulations to Cadence out there. This is a really big deal. And quite frankly, if you could think about, increasing time to market, having the best PPA, that's performance, power, and area, and that kind of is the deal here. This is, incredible value to these customers.
Yeah, I don't have a close relationship with Cadence, so I'm taking this as a 78% learning opportunity and a 22% because I have an opinion on everything. But in the long and short is that, the ability to expedite the development of AI tools is going to be critical, and AI on silicon is core. We talked about this with LinuxOne. We talk about this constantly on devices. We talk about this in data center applications, Pat. So, these are kind of like, the ASMLs and the companies that are kind of like the companies behind the companies that make things happen. It sounds like Cadence is really going to be an enabler for a number of the key silicon providers to be able to speed up and expedite the design of silicon for things, whether it's ADAS, whether it's data center, whether it's on device, Pat. And so I'm going to dig a little bit more into this. I don't have a ton of commentary here, but it's impressive. And you're going to write a Forbes piece, right? So I can plug you.
Yeah, I'm going to do a Forbes piece, and I feel like my role in this is to simplify things. If you look at the grand scheme of semiconductors, the tool vendors get no credit, right? Even though you couldn't do any of this. And it also relates to even parts in China that were developed using Cadence and Synopsys, right? Which came under the rules where the Chinese are going to have to create their own design tools and methodologies. And when Pat Gelsinger talks about using industry standard design tools, he's talking about companies like Cadence, right? That enable Intel to do their own foundry, because these are the tools that customers use to take into a foundry. So good analysis here, good adders. Let's move to something completely different, and that Tesla self-driving is under fire again. What's going on here?
Oh, Pat, there's a number of different pieces out there. I sort of focused in on one in The Verge that talked about, and like I said, while we don't do a ton of news, I think it's important to just give a little backdrop here. There's another Tesla owner coming after Elon Musk. This time, basically for misleading and deceptively marketing its autopilot and full self-driving advanced driver assistance features that are software add-ons. This is a individual plaintiff, I believe a gentleman named Briggs Matsko. And by the way, there's another class action going on as well. So there's an individual and a class action. Going back to about 2018, people were paying $5,000 for what was kind of a full self-driving. I believe in the newer year now, that's gone up to $15,000, but yet it's not working all the way. He's basically talking about how, this full self-driving has been promised for many years. In 2018 or 19, Musk said Tesla was going to make a cross-country trip. Here we are in 2022. This hasn't happened yet. We, of course, have heard about crashes all over the country. I won't say they are endemic or anything yet, but there's been a number of them that have happened, and obviously there's been some deaths, and this is part of, I guess, innovation when you can't do it in a virtual world. But that's a big problem. So, the company is basically it's been facing scrutiny for this for some time. Pat, we had a really interesting discussion with Luminar CEO Austin Russell, who has also brought attention to how the computer vision only approach that is being used by Tesla isn't meeting the needs. And, I know Tesla got real upset about some of the demos. You talked about another gentleman, I can't remember his name, that came out just a few weeks ago and also full head-on assault on Musk between having to buy Twitter and no longer wanting it, his full self-driving under fire, and now this lawsuit plus the I think California has another lawsuit, right? That's the one is it California, Pat? And I don't want to 100% here. Musk is kind of like a constant, he's like a fireball in the media right now. And overall, Pat, I guess this is where I come in with an assessment and say, how do you break the standard, take risks and chances, and do so in an industry like this where safety is so sensitive? How do you make promises for a capability? But obviously, we know now that capability is not quite as capable as it's been promised. We've got a whole world kind of with their eyes on Musk, and we have a pretty significant amount of data now that says what's being promised isn't really what's in the market. And at the same time, I like Elon Musk. So this is not like I like that he's bold. I like that he's ambitious. I like that he stands up to things. But Pat, I think he might be in a little bit of trouble here.
Yeah, Daniel, I never really fully understood the veracity of the Tesla crowd until I started bringing some truth to the reality of Tesla cars. I'm not a newbie. Listen, I have run engineering groups. I've run businesses before. I know how these things work. I applaud Musk. I think he's a freaking genius. He is our age's Howard Hughes. And by the way, if you know the history of Howard Hughes, he had some weird peculiarities, just like Musk does. And I think there are certain brains and types of brains that enable this. But, let's get to the reality. I mean, the National Highway Transportation Safety Association brought out numbers of Tesla crashes in the US where ADAS was enabled, right? And in July, there were 51 crashes where ADAS was enabled at the time, and airbags were deployed 46 times out of the 51. So that means all these crashes were big, okay? And I get back to what you talked about, which was in 2016, Musk made the claim that he was going to do a coast to coast by 2018. And he said every single car built since October 16, and this was with HW2, will be updated. And Elon doubled down in May 22nd of 2017 and has said, hey, we're still on for the end of the year, just software limited. Any Tesla car with HW2, by the way, that's the NVIDIA silicon, will be able to do this. And here we are in 2022, over 5 years, over 6 years on the initial claim, and we're not here yet. So I believe one of the biggest mistakes that Musk made and Tesla made was getting rid of radar and never adopting LiDAR. And, at the time, LiDAR was this massive puck, right? And you can look at some of the Google cars that are going around as robotaxis. They're huge, right? That's how you know there's LiDAR. But companies, out there have absolutely brought down the cost to below $1,000, like Luminar. You have other companies doing silicon like On Semiconductor for the automotive. You have Intel bringing down the cost of LiDAR. And I think that Musk really needs to reassess. I don't believe that he has the on-chip hardware enough oomph to make it happen. Do I have the exact figures on that? No. Does Musk keep improving the software? Yes. Are there still big issues with it for FSD? Absolutely. I think the company should have a cooling off period and reassess. Otherwise, the government's going to step in, and the government already is with this.
And we know our current administration, just a quick booma, clearly doesn't like Tesla all that much to begin with. I mean, after having 99% of the EV market in the US, didn't even get an acknowledgement when we were talking about electrification. So, a little chip on Musk's shoulder. I mean, I think you said it really well. He's got an opportunity to adopt second and third layer technologies that would provide a much more precise full self-driving capability. And for whatever reason, just absolutely steadfast that it can all be done with computer vision. I don't understand what that is other than stubbornness. You mentioned the Howard Hughes thing, Pat. But anyhow, I just think, it could be better. It's not. And there are lives at risk. And that's not something to take lightly. Even one life when you don't have to, it's, I just sometimes I feel like we're really callous and apathetic about things like that.
Yeah. And just to circle back, I mean, ADAS is safer than a human. I realize that, but that's ADAS. When you do FSD, it's a completely different ballgame. So let's move on here. Final topic. ARM did a infrastructure update where they talked about an updated Neoverse V2 called Demeter. I'm not too sure. And some updates on their V and E platform. So some of my biggest takeaways is for the first time, ARM is saying they will have leadership with single socket, one thread integer cloud performance. And that's over Intel, and that's over AMD. Now, I don't think that they know what Ampere computing is coming up with, but we'll see. The other thing was that NVIDIA's Grace super chip is in manufacturing, and the claim there was 2 times the performance per watt over x86, and I think that was a big deal. Also, there was an AWS disclosure that 48 out of the top 50 AWS EC2 customers are running Graviton 2. And by the way, that doesn't mean they've moved off of x86 and moved solely onto Graviton 2, but it says that they are running production workloads. I thought that was impressive. And, Dave Brown, we had him twice on the 6.5 Summit to talk about his homegrown silicon. I thought that was is great. And just stepping back, Daniel, I mean, the company has come such a long way. And ARM being a British company is they don't flex a lot. But 2 days ago in the infrastructure announcement, man, they flexed. They're like, hey, we are first with memory bandwidth, the highest level of memory bandwidth. We were first over 100 cores. We were first with DDR5 and PCI Gen 5. We were the first one with over 500 spec-int rate 2017 with the Alibaba Yidian 710. I mean, they were on a freaking roll. And then they're like, hey, and don't forget, when it comes to DPUs and network and security offload, whether it's AWS Nitro, Intel Mount Evans, Marvell Octeon, Intel Bluefield, AMD Pensando, all based on ARM IP. So serious flex going on into the future, but also showing what they did in the past. And I have to tell you, in my mind, this is kind of this pivotal moment. We're going to have to see the companies that come out with Neoverse V2 to see if everything lives up to it. But I do know that ARM is a very conservative company in the claims they make, and they have to be extra conservative because they don't make chips. They make IP that chip companies pull in to make their chips better. And I'll end with with all this, I'm interested to see what Ampere has with Ampere 1 that's been sampling since May, that has a custom CPU architecture based on an ARM ISA and some other custom IPs.
More companies using ARM to build silicon. So, hey, you said a lot. You did it well. What I guess I'll lean into here is the ARM ecosystem's growing. The ARM adoption is becoming more crystallized. The x86 ARM debate will rage on for a lot of different particular, both in the data center and in the PC space. But ARM is here to stay. I think any debate about that is over at this point. The focus on power performance will always cause the geeks to want to geek out and do benchmarks and test. The company has already gained a foothold. You mentioned all the different architectures, Pat, that are based on ARM already. We talked about effectively every hyperscale cloud provider that's serious right now has at least one offering that's built on ARM or an ARM variant from an Ampere or something like that. And so ARM is here to stay. I think we're going to rage on to the debates about, the very large specific workloads that have been optimized and optimized and optimized on x86. And can ARM bring the developer crowd along and bring that kind of the SAP workload? Is that going to ever be run as well in a data center on ARM as it will on x86? And I think the answer is that's where it's heading. And so, Pat, I think ARM's being more aggressive. They're a public company now. I think that's going to put pressure on them to be more exciting with their roadmap and try to build investor sentiment and strength. But I also think we've all watched Intel and we've watched AMD and we watched NVIDIA, and we know operational execution is everything in this space. So can they get this out? Can they get it out on time? And of course, like you said, just getting it out. Sorry, you're right, Pat. Soon to be public company. Can they get it out? Can they get it on time? They're going to be held to a much higher standard over the next several quarters. And then, of course, who builds on it and how quickly are they able to get what they're building on ARM into market? But they were exciting announcements. They definitely look like they're going hard at it in that data center space. And competition's good. I don't know. You and I say that a lot. I'm not going to deviate.
Good stuff, Daniel. No, I think it's, the time, there was a lot of criticism around SoftBank's acquisition and of ARM and, SoftBank in general. And SoftBank has laid a bunch of eggs, but ARM was clearly a success, gave ARM time to come into the pits and make some serious investment. And some of the biggest IP areas they invested in were infrastructure and automotive. And those businesses are taking off. IoT didn't, they're selling off and laying off a lot of people in IoT, particularly on the software side. And that bet didn't work. But quite frankly, IoT didn't scale quickly as any of us thought that it would. And I'm looking forward to them going public to see even more granular data. But hey, Daniel, we've been going 48 minutes here, and I think we are going to wrap it up. Good show, talking Oracle, IBM, Adobe, Figma, Cadence, Tesla, and ARM. Bestie, it's great to see you. And it snowed up at the very top of the peaks here of the mountains, and I'm going to stay the hell away from that. But I might do some long hiking, or maybe I'll go into Aspen and drink some champagne. I'm not too sure which of those I'll do.
Well, it's Friday. You ain't got no job today. And, that's an old movie reference. People probably wouldn't get it. And we're really old and it sounds tacky. So I'm going to let it go there, buddy. But enjoy your trip. Enjoy your vacation. I'll see you next week. We will be eventing our tails off. Intel is a big event next week.
Gosh, I hope it's not that. Hope it's not that week. Because
wait, no, that's the next week. Next week I've got Dreamforce, and and you and I will see each other in New York for Qualcomm Automotive Investor Day, right?
That's right. Yep, I'm going to be paying attention to paying attention to Dreamforce, particularly on some of their growth areas, doing a workshop with Cloudera, and spending 2 days in New York City with you at the Qualcomm Investor Automotive Day. So looking forward to that, buddy.
See y'all.
That's a wrap. Thanks everybody for tuning in. Hit that subscribe button if you like what you heard. If you didn't like what you heard, hit that subscribe button just so you can hunt Daniel and I down on social media and tell us where we're wrong. No, we appreciate the comments. We're not right all the time, but we're right on the important stuff. That's what I like to say. And we've made some pretty good calls. But if you have any commentary, hit us up on Twitter. Hey, we appreciate you. Thank you for tuning in, and have a